Morning all, hope you're well. Quick video this one. I'm going to talk a lot about technical analysis of why Bitcoin moved, but I'm also going to talk about the technicals of the fundamental side of it as well. Why? Because it matters more than you think. A lot of people dismiss the fundamental side of cryptocurrency as in why certain things happen. So, you need to know this. So stick around to the end of the video. I'm going to show you a really good news resource that can kind of get you a bit ahead of the game if you're looking for certain things. Now, in terms of what's happening in August this year, I've mentioned it in other videos about Litecoin. The same thing's going to happen with Bitcoin, so be very, very careful of what you're doing with Bitcoin in certain elements and always pay attention to the news. So stick around, hit the subscribe button, hit the bell button, whatever, and become a subscriber. Obviously, hit a comment if you like this sort of stuff. I'm going to go pretty deep in terms of the mining element, so stick around. You'll probably enjoy a little bit of it, and you may get a little bit bullish at the end of it, okay? Right then, so let's talk about mining. Why is it important? Because Bitcoin is kind of built on it, essentially. You can't get away from it. Now, a lot of people are talking very negatively about miners, and the best and most positive news was when CoinDesk released an article at the start of March saying that the miners are starting to activate. And you see it here in the trend and the chart. It's obvious, really. Any sort of line graph chart, whether it's a hash rate chart or a technical analysis chart or an RSI or whatever, it doesn't matter. If you can see a trend, you got to follow it. So you can kind of see here, we were rising up the difficulty of the Bitcoin cycle, and this was actually in last year. This was literally last year. So 1 second, got a bit of a hair under my mouse. So you can see this region here. We were going to stupidly high levels. This was in the bear market, and this was the biggest problem that we had. When Bitcoin was going up, it was going to increase the difficulty, but the problem was Bitcoin prices were coming down and the difficulty was still going up. So the miners were still activating, the algorithm was still doing its thing in terms of the cryptography. So what that does is every 2 weeks it adjusts. It gets even more difficulty, so it increases the security of the blockchain. As it stands still, Bitcoin is the best blockchain. It has never been hacked. It is awesome. Now, this is technically what's happened. We turned, okay? When we turned, it created issues in terms of support. When the difficulty started to go down, that was indicating that miners were knocking off their machines. They were kind of losing patience. They were starting to lose profit. And that happened in certain countries depending on power outage and stuff. So, we dipped. With this dip, we also seen a massive dump in November. We went from 6,000 down to 4,000. You probably remember the free fall, and I'm going to mention that in a later segment of this video as to why we've risen up quite high recently. It was called the free fall. That was when all the miners went off and the charts followed it. Okay, that was when I had the bias that if the miners were acquiring their levels, Bitcoin would struggle to get below $6,000. What happened? The miners knocked their machines off. We dumped. Okay, it happened. Okay, but what we see now, the miners are starting to come on board again. They are starting to get their profits back and they're starting to stack. Huge indicator. So from the start of December, we've seen this dump, right? So 5th of December, end of November. We eventually, towards Christmas time, we saw the Santa rally. Okay, the miners started to activate their miners again. We started to increase, and you can see here we're starting to go up again. That is massively significant of volume and mining output. It allows them to stack up their bitcoins. We're starting to generate more bitcoins coming out of the machines, and ultimately it creates a layer of support. Massive. Is that an indication the bottom is in? Potentially. Okay, so that is one thing I want to talk about. Okay, so mining is a big thing. What is happening in May next year? Bitcoin halving. I'm going to mention that a bit more in a bit, but we've also got Litecoin in August this year, halving, and there's no coincidence that Litecoin is now at $87 at the time of me recording this. If you go back a couple of weeks, I was talking about Litecoin very bullishly that it could go over to $250. It's a possibility. It really is a FOMO possibility that it could do that. It is already up 200%. It could go on further than that, and it has in the past. So the technical side of it, in terms of analysis of the fundamentals of miners, is quite important to understand support, resistance, and potential increases in demand. Supply and demand is massive. If those blocks all of a sudden halve in terms of reward, it's creating a thing called scarcity. And the great thing with crypto assets is what we all have is absolute scarcity. We know what the maximum supply is and what the circulating supply is. It's pretty good. So let's jump on a chart first. Let's look at Litecoin first. Why? Because Litecoin has been sporadically going mental since December. Articles have been going out roughly this time, January, February sort of time, saying that the miners have put into consideration that the value has increased due to the mining halving, what's coming up in August. So it's already been put into effect. Great long opportunity at a dip. Okay, not financial advice. Please do not just jump in on that. There's always room for a dip, and I'm waiting for a dip. I'm waiting for it to come back down. I'm hoping it does come back down before halving, because August is way away, quite a way away, if I can get words out. So look at it from that point of view. So in terms of the technical side of it, this is just going parabolic in a trend. It is in an incredibly strong trend. It has failed to break below the moving average 20 on the daily time frame for a long time. So, what? How long? Nearly 2 months. That is a long time in cryptocurrency, a long time. You fail to see that in 2 months, especially in an uptrend, in a bearish trend. Now, I'm going to ask a question to you guys, and if you want to comment, you can. Are we out in the bear market? It's a really, very good question, and a lot of people are asking the same question. I personally think that we are getting close to being out of the bear market. That does not mean that we're going to go into a bull run. It doesn't mean we're going to go to 20k, 40k. It just means we're out of the area where we're more likely to go down than up. That's kind of what it is. So you've got bull market, where it goes more likely to go up. Bear market. So you can see here, you can kind of look here, kind of like bear, bull. You know, it kind of happens. So the reason why I'm saying this is because the moving average 200 is a massive indicator for the technical side of it. A lot of coins at the moment are trending above that now. So Litecoin's one of them. Litecoin, in my honest opinion, is the market maker at the minute. It's a leader of the pack, essentially. It is the one that the most volume is going into in proportion of its market cap. So it's kind of the one that's kind of leading the way. What Litecoin does tends to follow the market. Not so much what Bitcoin does. Litecoin tends to pump the coins at the minute. Since the start of this year, if you've seen a pump in Litecoin, everything reacted with it. Okay, same with any dip. So just be careful of what's happening. It also holds the most amount. My phone keeps going mental. It keeps holding the most amount of value as well, considering it's not really retraced as much. Okay, so bear that in mind on the technical side of it. So if you're looking for a coin to enter as a safe bet and looking likely to be the biggest influencer, Litecoin with the halving probably going to be a very good bet. It was the same with the start of the year with Ethereum. Ethereum led the market for a couple of weeks due to its fork. It happens, but then again, you've got Bitcoin. Bitcoin has a big influence. If Bitcoin has a wobble, the altcoins wobble. Doesn't mean to say that Litecoin will wobble, but it will just mean that, you know, a lot of pairings are with Bitcoin. So just bear that in mind, okay? So let's look at Bitcoin, right? Why? This little channel here, I'm not going to say I've called it. I said in my premium channel, literally that day on the 1st of April, right, I said something's going to happen. I didn't say what. I didn't call a short or a long. I just said, guys, we're coming to an end of a channel here. The channel breaks tend to be quite sporadic, right? They're not always as parabolic as this. And I want to talk about this. Now, this green box here is where I want to rebuy back. I'm in Tether at the moment at roughly this sort of price. It went up quite parabolically yesterday. It went up to, I was like, what has happened? So what I did as a learning point of view to teach to you guys right now, if you're interested, is the proportion of Satoshis on altcoins goes down massively when Bitcoin rises. So if I just go onto a coin here, let's look at, what should we look at? I don't even know. Let's look at XLM, right? So obviously everything was going up over the course of this. And you see this on the 1st of April and 2nd of April. That was actually a monumental dump. And this was just when Bitcoin was normal. Okay, so this Bitcoin was normal. We were going up. All of a sudden, when something happens, boom. Mainframe, again, the sats goes down every time. That's a good one for you. Woo. When the sats go up, okay, in value, it's because the altcoins are working, right? If Bitcoin goes down massively, you may find that the Satoshi values of your coin may stay the same or go up. It's a bit weird. But your fiat value, everyone looks at the fiat because coin market cap, for example, is all fiat based. So if you look at fiat, coin market cap, if you change it to Bitcoin, you're going to see some different results. It's never always the same. But if you go back to the day when everything was going crazy on the 1st of April, when everything went pop, if you looked at your fiat value, you were up 20-30% on a lot of coins. But if you looked at the Satoshi values, you were down 20% or whatever. In some cases you were. So, always look at that. Now, what I'm trying to say here is, the safest bet you can do if you're holding altcoins, if you see a massive rise in Bitcoin, go into Tether. Why? Because you are losing probably about 20-30% Satoshi values in a massive pump on Bitcoin, and you would have done. I did, certainly when you see it. When you look back and backtest it and see what you would have had, it's a lot. But you would be up in fiat, okay? You'd be up massively in fiat. You put it into Tether. But you are banking on Bitcoin retracing, right? Why? Because you could then have extra fiat value, okay, in your pot to put into altcoins at a lower Satoshi value, which is kind of a profit gain of reclaiming those. What tends to happen is it's an elastic band effect. Eventually, over time, the Satoshis will catch up to Bitcoin. Okay, it just tends to happen. Whether that is because Bitcoin's retraced and dipped a bit, or Bitcoin just stayed steady, and eventually, over time, they will go back up again. So that kind of is the mindset of it. So what I did was I went into Tether. I took out my premium elements of it, so I only went into. I had mainframe and QuantStamp. They're on the watch list in April. If you want to check out more information, check out the links in the diagram essentially for premium. But ultimately, what my thinking was, I do not want to lose Satoshi values, and in hindsight, it worked because Bitcoin's where it is right now, and the Satoshi values from when I sold are a lot lower now. Okay, so kind of helpful. So I've not lost Bitcoin. I've still got fiat waiting to go into a coin eventually, but I do think, as it stands, we're going to retest this area here. Why? The moving average 200 needs to be used as a support. If this is an actual support and it's finds it and holds it officially, that would indicate to me that we are out of the bear market. Doesn't mean we're going to go into a massive bull run or a parabolic boom. It means that we have got support from the largest support element of the longer time frames, the moving average 20 on a daily time frame. It's quite a big thing. Now, if I go on the 3 daily, we are still somewhat. There you go. Gives you an idea of what I was doing. We are still quite a way away. So on the 3 daily, we only hit the moving average 100. So they all add up in some way or another. And you can argue here there's a weekly time frame. So we're still, we've still got a bit to move. We're not fully out the woods yet. But in terms of me looking at it from an output of an investor sort of trader, I like to look at support of the longer time frames. I like to know where we are. And when you look back in time and you see certain things, this is Bitcoin. The last time we actually closed above this was the start of March. So we're over a year now, so 13 months ago. And you can see here we dip below it, we retest, fail, didn't even get close, fail. That was a really mental candle, that one. I remember that one. A lot of people got burnt on that one. And yeah, that's a massive indicator. So if we close, we go down to it and we hold the support, it is a massive thing for the technical side of it. Doesn't mean we're going to go to the moon, doesn't mean anything. It just means we have got support from a larger form, essentially a big massive comfort blanket. So that is that. I want to talk about one more coin though. I want to talk about VeChain. Why? VeChain is another one that is now finally above the moving average 200. It's obviously rechanged and rejigged its supply and stuff, so the data isn't the greatest, but you can see here it died. But it's come back to life, and everything's been coming back to life since this sort of period here. Why? Again, the bullishness in the miners of Bitcoin is starting to show indications of signals to buy. People are buying in certain areas because they're seeing the rhythm of the miners and the halving that's coming up. So halving and Bitcoin's coming up. Litecoin is coming up this year. They're big catalyst events of volume. People are going to buy. People are going to be interested in, not so much normal people like me, the bigger people that, oh, that's a good indication for safer bets of money. So VeChain's got a summit coming up. They've done some very good partnerships, and it's held as support on here. That is a very good signal to get involved. Now, the summit's coming in the 18th of April. This again is on my watch list, so please do further research and check it out. Any issues, let me know. But Fundamentally, I'm a big fan of VeChain. I think it's a very good coin. I think it's one of the best and has the best partnerships around, certainly in Asia and around the whole world. So in terms of real use case of blockchain solutions, it's really, really good. And again, on the technical side of it, it is marrying up with the fundamentals. Partnerships are really, really good. The masternodes, the staking, the elements of what it actually does, it's a big, big thing. So make sure you understand what you're buying. And the fundamentals are massive. But in terms of me as an investor and as a trader, I'm a lot more bullish than I was bearish a couple of weeks ago. I'm not bullish, but I'm like, there's more chances of this going up or holding where we are, or at least if we do come down a little bit, we will not crash down to the floor. But there's still some room for, kind of issues essentially. So when you look at Bitcoin, this could be the most monumental bear trap ever, right? But there's other factors to say that it may not be. I've already mentioned one element, which was the mining. The mining will generate support. If this holds its support and we move on from it, we have found another bottom essentially. So the first bottom, obviously down here, we know that we've hit it. We could very likely, in one way, to some people, go back down to there. We could, okay, we could, but it's very, very unlikely in more elements than not now, if that makes sense. So the technical side of it, people are like, right, we're going to go down to there. When you look at the fundamentals of the miners and the volume and all the other bits and pieces, and also one thing I need to mention in a second, I've just remembered, the SEC, it's going to change the bias of people. That then removes the technical element of it, because the technical side of it, people are more often to look at buying than selling. Yes, people will go, oh, manipulation, but when they're going against the trends, they're not going to do it. They're not going to fully go, right, if the miners are on now from the bottom, if the SEC are on our case and there's potential elements of ETFs being approved in the next couple of months, that's got to be a bad idea. And then you've got the bullish sentiment of the whole market. You can only reject the market and manipulate it when everyone's bearish. If everyone's bullish and you're going against bigger players, you're not gonna win. You're not. So just be mindful that everyone's gonna go, oh, we're gonna go down to 1,800. I don't think we will. Personal opinion, I think it's a long way off now. But we need a few factors. If this does not hold, right, we're gonna go down to here, right, down to 4-1 again. Essentially, we're gonna write off the whole move if we do not hold. Now, I want to talk about what I mentioned at the start of this video was a free fall. The free fall came from this here. We free fell massively. So, why is this region here massive? And why does it marry up with this? Well, when you put a Fibonacci on this, right, and you're going to see this literally bang on the T, when you consider retracements and going back up, this free fall was huge. It was monumental. It was like, fuck. It was horrible. But when you look at it in a grander scheme of things, the reason why that's gone up so much is because that fell so fast. So it's got to be, there's a lot less resistance and support in that region. So if you put a fib on this region here, so if you go even from here, I don't know, 8th of November, sorry, down to the bottom, we bang right onto the golden ratio. Now, I was saying in my premium group, a lot of people were shorting early, and I shorted early. To be honest, well, I didn't short, I just went to Tether. The BitMEX chart and the Coinbase chart is about $200 quicker in some elements. You can see it here. Look at the difference there. It's crazy. That's $47. It was actually higher the other day. So if you go into the BitMEX chart, this whole chart would be up to here, essentially, in terms of where everything was marrying up. So I'll put it on now, just to kind of give you an idea. So you don't think I'm talking complete bollocks, basically. So you can see already. Look at that. It's actually went. Did it go up high? I don't know. The other day when I checked it, it did, yeah. So it actually went up a lot higher. Not as much though. So in terms of the BitMEX chart, it marries up differently. So that what day was that? That was the 3rd. Again, it was the same on the 3rd on Binance. So yeah, it was a little bit different in terms of value. A little bit different. But at the time, when you look at it, the actual wick hit first. It was strange to kind of show you it. So if I go, oh, there we go. We'll go on the 4-hour time frame. So it literally kisses it bang on the absolute nose. And that is where I want to rebuy. Personal opinion. Not financial advice. But if I go into BitMEX now, let me go back onto it so you can see it. There you go. So within this region here, it spiked a lot higher, and within that region there. So you can see it actually spiked a lot higher. So just be careful of what you're using in terms of charting. So if you're using Binance, for example, you wouldn't want to use a BitMEX chart. Same, for example, if you're looking at shorting it, you wouldn't want to use the wrong chart. So in terms of that, it's kind of strange, really. So if I just go, what time frame was that? That would have been the right time frame. But what is this one here? 5 a.m. This was the one that was weird. There you go. Look at the difference there, right? So when I'm talking about time frame differences, that is massive. So when I was looking at TA yesterday in the afternoon, the BitMEX chart was very close, and you can already see it. So just remember that. Put a thing in. Actually, let's just duplicate it, make it easier. Come on, Ash, use your brain. Massive differences, huge differences. So look at that. 5-1, right? 5,100. Roughly the 5 a.m. element on the 4-hour time frame, peak wick. 5 a.m. in Binance, 4,800. So there's a $300 gap. Massive, massive, massive. So yeah, when you're doing your charting, just be careful what you're looking at. This eventually leveled out, but you know, high leverage markets, it causes issues. So technical side of it, not always fun if you are reading the wrong chart. So there you go. I'm finished talking now. I hope you got something out of this, but for me, personally speaking, we've hit the golden ratio of this retracement. I think we're going to come down now. Personally speaking, I'm hedging. I've not put an order in yet, but I'm hedging. We're going to go down to here as one target. If we want to do another target, back down to the start. It could be the monumental bull trap, or if you want to go for the safer route, we may go here. So there's 3 targets that I'm looking at. However, this is Bitcoin, this is crypto, none of this is financial advice, be wary of that. But that has kissed it right on the lips, okay? Really good technical side of it, and we're starting to come down. We flashed down, we popped back up, we're kind of just hovering at the moment, so we'll see. But in terms of this channel break, was massive. It was good to see, but I do think we're going to come back down, and we are going to retrace at some point. Potentially going to happen very, very soon. I've just removed my head just so you can see this. It makes it a lot easier. Now, fundamentally, for me, as an investor, I like to know what's going on, right? So, for me, if you follow me and you want to make gains better, or I wouldn't say better, but less with risk, because you know what's kind of happening, it makes things easier. For example, you can search for things, you can find out the date, time, whatever on this. You've got the trending news, so you can see here, Swift related, XRP, Ripple, whatever. Really good bullish news. SEC, long awaited token guidance. These are sort of things that are very bullish news. You've got VeChain. VeChain's a massive coin, by the way. And then you've also got the hate of Bitcoin Cash. So it's really good to see the fundamentals of people's opinions as well. So we've got Cardano. Now, if I put in ADA, we'll see what comes up. Now, this is everything from ADA. You can also get the whole element of what, you know, what the charts are saying as well. So it's really, really good. But you can look at here, and you go back in time, right? And if you start looking back in time, you'll start to see certain elements of what's happened. Now, I just want to give you an insight of why I've been, you know, quite bullish on certain coins, because a lot of the news articles come out are helpful. So, for example, here, support of the Nano S. Really good that it's supporting it. And you can see here, again, another one. You got a documentary, you've got all kinds of stuff. But you've also got this. EOS hints at a massive announcement. That was a 1st of June announcement. You need to know this sort of stuff, because June is a long way away, and what's going to happen is I'll probably do a video on EOS in probably May time. It's probably a lot higher than it is now. And why? Because an article went out in March time saying that something was going to happen. So you just got to look for them. Now, you got an article, Forbes, Cardano. These are all massive indicators to explain why we're seeing a rise in the price. You see here, the rise in the price. These are all from a couple of weeks ago now. ADA surged 8% overnight. Crypto investors confident in Cardano's roadmap. The roadmap changed recently. They've also announced their mainnet. Massive, massive announcements. And these all came out in tweets, in the news, on Reddit. And these are all linked to Reddit. They're linked to YouTubers. They're linked to article websites that have got real good understanding of coins. So honestly, Crypto Panic, check it out. It is freaking Awesome, right? Obviously, don't look too much into it, but you've also got here mainnet launch. But I can guarantee there'll be articles from absolutely ages ago that were mentioning the roadmap had it in situ on, for example, Reddit. People will find out and tell it, and it takes a bit of guts, yeah. But when you start to see when coins are trending or they're in a good bullish momentum, the news will carry it with the trend. Okay, so top tip: check it out. Check out the news. There's a lot of information there, and you will eventually start to see the trends of what reacts to coin. Mainnets are really good. Events and announcements are very, very good as well. There's other things as well. Coin burns, token burns, etc. Really, really good for the fundamentals. Thank you for joining me. This was a long video. I do apologise, but I hope you got some good value, and I hope that you do some research into what I was saying. Do check the charts. Don't just go blindly into certain investments. Please be aware of it. So check out the previous video and check out the next video, and obviously don't forget to subscribe and tell all your friends.